Gold prices continue to surge amid risks related to U.S. President Trump and high inflation, fast approaching the $3,000 per ounce mark. With explosive gold demand leading to supply strains, the gold investment fever has now shifted to even silver and bronze here in Korea. On today's GMS Focus, with Professor Jun-seok, economics professor at the Catholic University of Korea, we look into skyrocketing gold prices and what to expect ahead. Good morning, Professor Young.
Good morning.
Do you invest in gold?
No, I don't have enough money to invest in gold, I'm afraid. They don't pay us enough.
It's increasingly pricey, which is what we wanted to highlight this morning. Can you first break down for our listeners the steady incline in gold prices over the past few weeks, months, and year?
Okay, well, I'm going to stick with the U.S. dollar price per ounce because that's the international standard. Korean price for gold has gone up more because of some special circumstances in Korea, but let's just start with the dollar. Let's note that an ounce is 28 grams. Korea often measure gold in terms of ton. That's 3.75 grams. So this might not be what some of the Korean listeners are used to in terms of pricing, but again, this is the international price, so let's start with that. The most recent lowest price point for gold was in December 2015, and believe it or not, that was only $1,060 per ounce. Now, between that 2015 to summer 2020, there was a relatively moderate continual increase in price, and at summer of 2020, it was about $2,000 per ounce, and then the price held relatively steady and then fell somewhat, and in October 2022, it was $1,675 per ounce, around that amount. But then from October 2022, you started to see a rapid increase in the price of gold, and that has more or less continued at a similar pace until now. So currently, the ounce of gold is about $2,960 per ounce. To just give an indication what this trend looks like, in January of this year, beginning of January, the price of gold was $2,641 per ounce, and in less than 2 months, the price of gold rose by 12.07%. As I said, the current price right now, price yesterday was about $2,960 per ounce. So it grew about $320 in slightly less than 2 months. Compare that increase of 12.07% with a U.S. S&P index. S&P rose by 2.45% since the beginning of the year. KOSPI rose by 10.27% from the beginning of the year, though KOSPI is in sort of a bounce back. The increase in index of KOSPI was only about 0.07 if you consider 12 months. But still, the gold has been doing very, very well. I mentioned that the price of gold has been even faster in Korea because of some special circumstances for Korea. And these special circumstances are first, well, Korean won has been weak, very weak. And even though it has strengthened the last week or 10 days or so, the week has generally won has been generally weak against the dollar. So the price in Korean won has been rising faster. And then second, for Korea, physical supply, actual supply of gold is not keeping up with demand, so there's often shortage of physical gold available for sale. And that's perhaps because the current gold owners expect gold prices to continue to rise, so they don't want to sell at current prices. And then third, there's a possibility that many speculators are buying gold using regional cash. Now, the way that the regional cash works, you get the regional cash at a discount from the face value, and because of that, some people are buying gold using regional cash. That's arguably illegal, but in the circumstances when they do that, the government is actually subsidizing part of their purchase of gold. So that might be one of the reasons why gold prices are rising higher in Korea. Now, in case of regional gold, the government says that the amount of regional cash outstanding should not be enough to raise the price of gold that much, but still, that's what some people are arguing.
Professor Yang, I would like to take a closer look at some of the causes that are leading to the rapid increase in gold prices, starting with Trump gold price correlation. Gold prices have risen dramatically since U.S. President Trump's return to the White House. How exactly is President Trump and his policies driving up the prices?
Okay, well, Trump policies are driving up the price of gold, but if you look at the graph for price of gold internationally, the current rise actually began before the Trump administration around October 2022. And my feeling is that the reason for this trend, even though it does look like a single trend going upward, the reason for this trend changed during sometime between 2022 and now. So let's start with October 2022. Why did they start raising why did the price of gold start rising? Well, that was around the time when we had high inflation, but inflation was going down, and there was expectation of interest rate being cut. It's going to be cut. Now, the interest rate cut didn't come until later because U.S. Fed refrained from cutting the rates, but still, that probably started the current trend. Now, note that what does the gold do? What is the role of gold? Well, first, it's a safe asset along with U.S. dollar and U.S. Treasury bonds. Second, it's an inflation hedge. And third, it's a speculative asset. So the October 2022, the low interest rate meant that people would switch from interest rate related investment to something that would go higher, which was gold. Now, if you look at what happened since then, the interest rate has gone down. U.S. did cut the interest rate by 1 percentage point, but I think the reasoning for the continuing rise of gold now is because of the Trump administration. Since late 2023, people realized that President Trump was likely to be elected, and if the Trump administration, the policies that were mentioned during the campaign, that would lead to higher U.S. inflation and more global economic chaos due to tariffs. So since the 2023, I think the price rise for gold is due to being a safe asset and an inflation hedge. More specifically, Trump policies are expected to be inflationary because tariffs raise domestic prices, the U.S. prices, and strengthens the domestic currency. In this case, it's the U.S. dollar. And then Trump has promised to restrict migrant workers, and that's expected to raise U.S. food prices. And Trump has promised to cut tax rates, especially corporate tax rates. That is expected to increase inflation as well. And then the Trump policies, which are causing disruptions globally. First, we talked about this last couple of weeks, uncertainty about U.S. tariffs, but also Trump's willingness to take over Greenland and Panama Canal. And then currently, Trump's willingness to dump Ukraine and NATO. And then this has not gotten that much news in Korea, but there is currently massive layoff of government workers in the U.S. So the economic environment is pretty much chaotic in the U.S. right now, and so that's a reason for using gold as a hedge against U.S. policy chaos. And then there's some additional factors in the last few weeks as well. Rising gold prices have spurred short selling. That's betting basically that the gold prices will fall, but gold prices have not fallen. So short sellers must fulfill their contract, and that means providing physical gold to the counterparty in the short selling contract. So there is a gold shortage in some global markets, which is obviously raising prices, and we see this in stock markets in a few cases. And then gold owners are moving gold to the United States, fearing Trump tariffs on international transactions, including gold transfers. So that is increasing the price of gold as well. And then, believe it or not, there's a conspiracy theory. Some Trump supporters are claiming that government is lying about how much gold there is in United States in Fort Knox, that they're claiming that the gold should be audited because the gold has disappeared. And then some more alternate explanations that are coming up. Excess liquidity released during the pandemic, and it's not yet been mopped up by central banks. That excess liquidity, the money supply, is going to gold and other assets. And then during the Trump's first term and Biden's term, the U.S. started using U.S. dollar, global financial system as economic sanction tools, and many countries, Russia, China, are trying to find alternatives to U.S. dollar for making international payments, and they want to have gold as reserve currency because they're trying to avoid dollars, and they want to perhaps explore gold instead of U.S. dollars as method of international payment. So that is they're raising the price of gold as well. And these arguments apply not only to gold, but other metals like silver and copper to a lesser degree. And a lot of the current increase in silver and copper prices may be driven by gold prices as speculators see metal prices move similarly to gold prices.
As you've highlighted for us, President, Korea has seen an explosive demand for gold in the past few weeks, leading to supply strains. There's not enough gold for people to buy. How long would the feverish gold investment last, in your expert opinion? And what is your projection for the peak price before it actually begins to decline?
Okay, I hate to disappoint the listeners, but no one really knows. And that's, I mentioned that what part of the reason for shortage of gold now is because speculators sold short contracts, and the reason that they wrote short contracts was because they thought that the gold prices would fall, but they were wrong. Given the current trend, gold price will definitely hit $3,000, but some people claim that $3,000 will be a psychological barrier, and it won't go much further than that. Personally, I question that. Some people claim that it should go beyond 4,000 sometime this year. Again, I question that. That goes to the reason why people are investing in gold. I mentioned that the two factors that are mentioned often are the possibility of U.S. inflation and the current global economic chaos due mostly to U.S. Trump policies. Now, if inflation is expected to increase, or if this policy uncertainty and chaos continues, then the gold prices are likely to continue rising. But if U.S. settles down, gold prices are likely to fall. What do I mean by settle down? It means soft landing for U.S. GDP and labor markets. Inflation going back to trend, so it's falling and it's heading toward 2% goal. And Trump administration stops making these questionable policies and returns to traditionally sane policies. But we don't know if that's going to happen. But what I think will happen is that if these type of things happen so that gold prices start falling, then the price declines are likely to accelerate because much of the value is due to current economic chaos. And once that is settled, people will start having more reasonable expectations about the price of gold, and the price would adjust very quickly. Now, the problem with prediction here is that no one can predict Trump, and chaos can come from the Trump policies and the results of Trump policies. One of the things that the people are afraid very much now is that Trump policies will set off a stagflation in U.S. That will probably increase gold prices even more.
Professor Yang, many experts also agree that gold prices are more volatile than people think. Maybe when we think of volatility, the go-tos have been cryptocurrency, for example, and gold, the safe asset. But if it is going up at this rate and we're not quite sure when it will top off, if it will top off or continue to go up, that also points to volatility. Could that be one of the reasons why the Bank of Korea remains cautious about investing in gold despite other countries trying to invest more?
Well, short answer is yes, but the rationale needs further explanation. Now, remember, the objective of Bank of Korea is not making money. The objective of Bank of Korea is not helping investors and speculators make more money in the stock market or gold market. If the Bank of Korea starts buying gold, then it would raise gold prices in Korea, and that will probably help people who own gold or people who want to speculate in gold, but that is not the purpose of the Bank of Korea. The Bank of Korea's objective is to maintain financial market stability, and the reason that Bank of Korea maintains the foreign reserves is to protect against the possibility of a currency crisis. And in order to do so, it makes more sense to keep foreign reserves in currencies rather than gold. Now, currency crisis means that Korea as a nation or Korean government or Korean businesses as a whole, they cannot pay back international loans made in foreign currencies. So ideally, Korea's foreign reserves should match the proportion of currencies which form Korea's borrowing profile. So if, say, Korea borrowed 80% of its total foreign borrowing in U.S. dollars and 20% in euros, then foreign reserves should be 80% U.S. dollars and 20% euros. Now, if we keep that same profile, then if there's a currency crisis, we can the Bank of Korea can repay these loans very quickly using the foreign reserves. So the chances of Korea falling into currency crisis will be much less. But if you keep your foreign reserves in gold, well, you can sell gold in international markets and buy U.S. dollars or euros, but that will take time, and the value of the gold fluctuates. So it not only takes time, but you may not have, or you may have to spend more gold than you estimated because of this fluctuating value of gold, and perhaps even worse, the value of your foreign currency reserves will fluctuate along with the price of gold in international markets. If you keep your money in currencies, that's not very important because, well, even if the U.S. dollar currency rate fluctuates, if you owe in dollars, you can pay in dollars. So the changes in exchange rates can be sort of bypassed. But if you have gold and you using that to repay dollars, then that gold price becomes very, very important. So again, for foreign currency reserves, it makes sense to keep the reserves using the currencies that your country is borrowing. Try to keep the same profile as the borrowing profile.
In contrast, Bitcoin appears to have lost momentum after surpassing $100,000 for the first time in the month of December. Why aren't Bitcoin prices surging like gold? Why has it seemingly plateaued?
Okay, well, designers of Bitcoin have tried to model Bitcoin after gold, so we call it mining if they're trying to raise the supply of Bitcoin. And like gold, they limited how much Bitcoins that you can mine, but studies shows that Bitcoin acts like a technology stock rather than a safe asset like gold. And because of that, the value of Bitcoin depends more on monetary liquidity or the money supply rather than what we talked about earlier, inflation or the use as a safe asset. So Bitcoin is just not a safe asset yet. It's a wildly fluctuating speculative asset, and that I think is because Bitcoin has no real usage. Its value is determined solely by the psychology of speculators. If you think about gold has a real usage in semiconductors, tooth filling, jewelry, and gold has centuries of past history, which means centuries of data, which gives people an idea how gold fluctuates, how gold behaves. But Bitcoin is not that old, so there's no historical data. There's no real usage for this Bitcoin. It's solely determined by how people feel about supply and demand. So there's nothing holding back the fluctuation of the value of Bitcoin. There's no anchor. So the volatility of Bitcoins are much greater than gold or other assets. And in the last year or so, Bitcoins were perhaps overpriced because in the U.S., President Trump promised that he would liberalize and deregulate cryptocurrency transactions. He also promised that U.S. would buy Bitcoins to start a national reserve of Bitcoins, which would drive up the price of Bitcoins by reducing supply that's available to non-government buyers, like what we talked about gold for Bank of Korea earlier. And Trump has promised, and he actually did carry this out, to install cryptocurrency-friendly people in government. The biggest example can be the Secretary of Commerce, Ludnick, who's a very enthusiastic cryptocurrency backer. So the price of Bitcoins right around the Trump election may have hit psychological high, but then it meets reality. Trump has installed people in government, but he did not start any moves toward starting a Bitcoin reserve, and the expectations are going to change because of that, and whatever change in expectations we see are going to have exaggerated effect on Bitcoin because, again, there's no real anchor. It's solely determined by speculative psychology about supply and demand, and some disappointments are going to lead to a very large drop in value.
Thank you very much, Professor Yang, for your insights today. We really appreciate it. We'll speak to you again next week.
Thank you.
If you're listening to our program using the podcast service, just a reminder that we do go live Monday through Friday, 7 a.m. Korea Standard Time. So tune in and help us make the show more informative by giving us your input. See you bright and early on Good Morning Seoul.